Trading has never been simpler. You don't need lots of different tools, indicators, etc. to become profitable. All you need is fair value gaps and liquidity like this. We have equal highs above, which is an extremely strong draw on liquidity, as well as the equal highs above. As you can see, we have swept the sell side liquidity, which was resting in the market. Now, with that in mind, we have now created this bearish fair value gap right here. Stop shorting bearish fair value gaps and only use them to take long positions. As you can see on our next candle, we get this candle close above this bearish fair value gap. This means we have now disrespected this bearish fair value gap, and we should come up and take some sort of buy side liquidity resting in the market. So for better risk to reward, you can enter if we get a retracement back into this inversion fair value gap, or enter on the candle close above. Then your take profits is simply the equal highs resting in the market. Now this model has over an 80% win rate, and I trade it live every single day in my Discord. Everything that you need to know is all in my bio. No trader has ever got rich from signals, so stop looking for them and learn how to trade. And start that off by finding your daily bias. Now all a daily bias means, and what it is simply where you think price action is going to go on that day and why. And the reason why daily biases are so important is because if you can follow your daily bias when you are day trading, you're most likely only going to take trades in that direction, and your win rate will just simply improve a lot. When I'm looking for my daily bias, I only use fair value gaps. As you can see, we are currently respecting a bearish fair value gap right here, and then we are currently respecting this bullish fair value gap as well. So in a situation like this, when we are just respecting two fair value gaps, my bias would be kind of neutral, and as you can see, we've kind of just been chopping around. But as soon as we disrespect one of those fair value gaps, for example right here, we have now had this candle close above this bearish fair value gap in the market. Now my daily bias is going to be bullish, so when I am trading, I'll most likely only be looking for long positions, and that is now because we should come up and take some sort of buy side liquidity that is resting in the market. And as you can see, we end up coming up and smashing out the buy side liquidity, and we still look very bullish. Now I live stream myself trading every single day. If you want to join my trading community and watch me trade live, all the links are in my bio. I am going to teach you one of the strongest PD arrays that there are when you are trading. You might have heard of it before, but it is called a BPR, otherwise known as a balanced price range. Now all this is, in simpler terms, is two fair value gaps that are inside of each other and that overlap. For example, if we're looking at this fair value gap right here, as you can see, it is just a normal bearish fair value gap. But if you actually drag this fair value gap out to the left, then as you can see, it also overlaps with another fair value gap. So this is then called a BPR. And what BPRs are used for is when price action taps into the BPR, the balanced price range, it should wick out and go for the liquidity above or below. And as you can see here, it works perfectly. We wick into the BPR and then we come up to buy side liquidity. So these are just things that you can look for when you are trading, and don't just take my word for it. Go in the chart yourself and backtest and check out the BPR, as it is a very useful thing to know when you are trading. Stop using market structure shifts or breaks of structure in the market. They are only stopping you from becoming a profitable trader. Now what you should be doing is only trading with liquidity and fair value gaps. If we are looking at this price action right here, as you can see in the market, we get this break of structure with a market structure shift up to our left right here, but this is all completely irrelevant. And the reason you should be ignoring this in the market is because then traders will look for short positions from bearish fair value gaps like this, but you should really be seeing this as a sweep on sell side liquidity. What you then should be doing is marking out a bearish fair value gap and wait for it to be inversed. Now as soon as the bearish fair value gap is inversed after the sweep on liquidity, what price action should now do is come up and take some sort of buy side liquidity, or at least tap into an unmitigated bearish fair value gap. So I will enter into my long position. My stop loss is if we get a candle close back below this now inversion fair value gap. Then my take profit is simply buy side liquidity in the market. For example, here we have this swing high. Now I trade this model live every single day in my Discord. If you want to join my community, everything is all in my bio.